Welcome back, viewers. Today we will be testing the TEL indicator. But before we do, if you have not watched our first video and the videos after that, you need to go do that now. At the Academy of Forex, we are building the best trading system possible as a team. And as a team, we will all profit from it when we are done. You can find a link to the first video down below. You can also find a link to sign up for TradingView down below. If you use the link below, you will save a little bit of money. You can also find a link below to join us on Discord. Discord is a free group communication platform. On our Discord server, we are having great conversations about all things regarding trading. One of the biggest struggles on this channel is people who use other platforms like MT4 being able to follow along. Sometimes it can be hard to find the indicators we are using on other platforms. And so on our Discord server, I have created a channel for indicator creation. And on that channel, I pinned links to freelancers who can code indicators for MT or for TradingView. So if you don't want to create a TradingView account, you can hire a freelancer for a really small fee and have them code an indicator for the MT platform. Or if you are on TradingView and need an indicator created, something unique or an indicator for a system you have developed, you can also have them code PineScript. So use the link for either MT4 coding or use the link for PineScript. Lastly, I get a lot of people that are asking me for the entire list of all the winning indicators that we have tested to date. And whereas I am not a big proponent of gatekeeping information, I've put a lot of time and effort into creating the content on my YouTube channel. And so I don't think it is too much to ask for the viewers to go through and view the content that I've spent a lot of time creating. Now, if you are not interested in supporting our channel by going back and watching the content that I have created, then I have developed a solution for you. I've created a Patreon account. I will put a link to it down below in the description. If you sign up for Patreon and you sign up for the $9 a month account, I will send you the full list of tested and winning indicators to date. I will also send you an updated list of the indicators that we are testing at the end of each week. Now, of course, you have to stay subscribed to the $9 subscription, monthly subscription, to continue to receive the updated list of indicators. But that way it will provide me with the support that I need to continue to provide the free content that I am putting out for everybody to view. Now, if you just love the channel in general and want to support us, then there is also a lower, I think $3 Patreon subscription that you can sign up for that will also help support the channel and keep things going so that way I can continue to produce the content and the open information that we are creating here in this channel and in our Discord server. Again, if you have not signed up for our Discord, then you need to do that as well. It is a absolutely free platform where we have real-time ability to chat and have conversations about trading. And again, if you want to support the channel with Patreon, then you can find the link down below in the description. All right, as I said, today we will be testing the TEL indicator. But before we do, I wanted to put the indicator scoreboard up for everyone to see. So to date, we have tested 143 indicators. And out of those 143 indicators, 59 of them have been winners, which means that they have met or exceeded the 60% win-loss ratio threshold that we have set for them. The best ones so far were able to achieve a 100% win rate. Now you need to go back and watch those videos to understand the context of how they were able to achieve that. But as we are working on building the best trading system possible, you could take any one of those 59 indicators and get out there and start potentially profitably trading the markets with them now. So go back and watch those videos, make a list of those indicators, and get out there and see what you can do with them. But stick with us here as we work on maximizing your trading profits. All right, as I said, today's indicator is the tell indicator. A setup on it is relatively easy. So basically you have these three main lines here that are green, blue, and red. And then you have a fluctuating quicker line that is here in orange. It's a little bit difficult to see. But basically, as that orange line is oscillating above and below the group of other lines here, it is giving signals to go long and to go short. Now, it does appear as though these three lines, the three group lines here, and even the orange line, it does appear as though they are moving averages. And so what it looks like is the three lines here have been grouped together to where they are basically just riding right with each other, slightly stacked. And so, and then like I said, you have the other line, the other, what I assume is a moving average. I looked into the code a little bit, and I know just enough to probably be dangerous when it comes to code, the Pine script coding. But yes, it does appear that these are a series of different moving averages. And so it's a little bit different take on the moving average trading concept that we have played around with a few different times. And so I will make a few minor adjustments to this. And let's see. Let's turn off those labels because we really don't need them. And let's change the color of these background. Let's see what I set this one at. Let's do 25 and 25. All right, there we go. So now we can see the next kind of component to the indicator, and you have these areas in the back here that light up green and red according to the way you should be trading the signal that it's giving. And so, of course, when it turns red, that's a signal to go short. When it turns green, that's a signal to go long. Now, it did have its own kind of stops kind of built into this a little bit, but of course, we're going to use our stops and our stop system that we have always been using. And so, like I said, all in all, it's not that difficult of a setup. And so really the lines themselves don't even necessarily have to be plotted on the chart, which is fine because it cleans up the chart just a little bit more. But we're really just looking at the background information, and as it is giving us signals to go long, to go short. And so all in all, pretty easy setup, and that's how we will be testing it today. So let's get on with it and see what we can get out of this indicator. Already right off here, I can see that we've had a heavy push to the upside here. And so anytime you have a push to the upside here that's had kind of multiple legs of movement, then you can assume that you are eventually going to get to the top of a move, and it's going to start running out of momentum. And so you start looking for signs of that momentum slowing down. And it's pretty evident here as it pushes up, and then it starts to sit here and trend sideways for a little while. And so most of the time, when you get consolidation like this and it's kind of trending sideways, kind of the school of thought is that this is an area where market makers are accumulating orders. And so the market makers obviously move the market in one direction or another. They keep the market liquid and constantly flowing. And so here they've had a strong push up, and so they've booked in a lot of profit to the upside. And now they are starting to eyeball running this to the downside. And so, of course, this is just hypothetical at this point. We don't really know what direction it's going to head in, but let's say that is what the market makers are doing. They've ran it to the upside, they've gotten in a lot of profit to the long, and now they need to shove this down some and get the markets kind of flowing along here. And so it's come up to this point and they start a consolidation phase. And in this consolidation phase, basically what they're doing is holding price here as they are buying orders, or more specifically, it would be selling orders because they would be going short. But they're accumulating orders and they're sitting here. Anytime price moves up at all, they're basically just absorbing the trading and not allowing price action to move much. And then once they've had enough of that, in this case, it was about 18 days. And so we're looking at, well over 2 weeks of accumulation that they just sat here and stacked up orders. Now it's time to shove this thing to the downside, and so that way they can now start booking in the profit on their short orders that they have accumulated. And so that's kind of the school of thought on what you would see here happening on screen. Now, of course, it isn't always this blatantly obvious exactly what is happening. They constantly have to be switching things up and doing things a little bit different, so that way people don't really catch on. But it appears that what they've done here is pushed it up, ran it into an accumulation phase, and now are starting to shove it to the downside. Now, of course, that doesn't mean that they won't spike it up for just a moment more. Sometimes they'll spike it up above the highs. And so say right here in this area, because a lot of breakout traders would put orders to go long right up here. So they would say, this is a accumulation phase. It's a bull flag. It's pushed up here in the pole. Now it's running to the side, and it is looking to break out to the upside for another strong move upwards. And so they would put orders to buy up here, and when price action breaks up here, that would execute their orders to then go long. Market makers will purposely run price up into these areas to pick up a bunch of long orders, and they're taking a position against it, and then they will shove the price action downward. And so let's see what they do here. There's a short signal right there. and it got us to take profit. Let me double check. Looks good, but yep, 200. And so you see there, it went ahead and ran it to the downside without spiking it up over the highs. Sometimes they'll do it, sometimes they won't. And so you never really know what it gives you. Kind of the advantage of knowing that they do this is that one, you want to be hesitant on taking breakout trades like this, especially after such a strong move. And so that's kind of the learning lesson from this, is that the likelihood of this breaking out and having another long run is pretty slim. And so, like I said, they've pushed it to the downside here. Let's see what else they do with it. See if they'll keep pushing it to the downside or if they will run it back up for a short period of time. And so often what I see is that anytime you have a significant move like this and then a correction, is that very often price will run back into the 50% Fibonacci level before it then starts to, sometimes it will start to correct itself back to the upside and they'll pull it back up to these highs. And, from there, who knows where they're going to take it. But again, often I see that after a strong run up and then a reversal, the 50%, the 0.5 Fibonacci level is often hit, and then they start to tweak price action one way or another accordingly. Let's see here. We're picking up some signals. This one right here did not work out for us. Go ahead and delete that fib level. Let's see, that one didn't work out for us. Came down, it hit this one here. This one looks like it barely, barely got us in. Good, good. Then we pick up another short over here. That one does not seem to be working in our favor. All right, let's play it out here a little bit. We picked up a long signal there on that one. That one did work out for us. Then another short right here. That one also worked out for us. This looks to be right about the retracement we were talking about, the 50. Yep, it is. So now we've come down and hit the 0.5 Fibonacci level. Let's see what it does here. Let's see if it has a reaction. Sometimes it does, sometimes it doesn't, but more often than not, I notice that it does. And so let's play it out here. A little bit of a reaction there, and not much else to it. Looks like they went ahead and shoved it down some more. So bounced off of it for a mere second. And so, like I said, sometimes it has a significant pull off of it. Sometimes it doesn't. But it's always good to have kind of an arsenal of weapons at your disposal to watch out for things that may be taking place. And so if you ever notice a move like this and it comes down and bounces at a level right here, throw a Fibonacci on it and see if you're at one of the Fibonacci levels, like the 0.5 or 786 or whatever it is. Let's see, so we are on to this one. That one was a good trade there. And so they pushed price action down for quite a ways here. did a pretty good correction right there, but it hasn't had enough momentum, enough movement to the upside for me to be really confident in saying that they're trying to run it one way or another. There was a short signal right there. Gonna mark this one here. Actually, let me double check that it didn't. What were we at? Yeah, 5. That one wouldn't have worked out then, but we did get this one here. That one did do a little bit better. All right, moving along now. And price action is just kind of chopping along at this point. It's not really making any kind of strong move in one direction or another. It just kind of makes these small little spats up and then a little bit down and then back up. And so it's really hard to get an idea of what price action is doing when it's not really making a clear defined movement in one direction or another. That's typically where I will start to look for price action to do something that is noticeable, is once it's made a strong push one way or the other. And that's kind of the first criteria for, in my opinion, me being able to read price action. Of course, you also have levels. I mean, you can look here, for example, price action came up here, touched this area once, came down, came back up, touched almost that exact area again before it then pushed its way down. And so, there is support and resistance levels that you can work off of, but in my opinion, you need to have kind of a multi-step, multi-conditional type setup before you start getting into some of these positions. And the first step, in my opinion, is finding price action that is overextended. And so this, in my opinion, does not look very overextended. It looks like price action has done this multiple times already. And so, I guess in hindsight, looking at it, you can say, well, it's done it multiple times, and we can conclude it's most likely going to do it again. But, that's kind of the give and take of trading. Let's see, that is a good one there. Let's see, price action is, it seems to slowly be stair-stepping its way up also, if you didn't notice, right, like this. And so that's also something you can pay attention to. I mean, it seems to be respecting this kind of stair-step motion here recently, and so now that it's come down and it's touched this area, it is possible that it could bounce off of it again. But once again, you haven't had a significant push in one direction or another, and so it could bounce and run up again to this area and then have a reaction, or it could very well just smash right down through this area and not really care about respecting it at all, and come down and try to make a run to this area where it's bounced off of a few times, there and there and there. So again, it's kind of a crapshoot. You can make educated guesses, but at the end of the day, they are just kind of guesses. Let's see what it does. And there's a perfect example. exactly what I was talking about. So respected that for one, maybe two candles, and then it smashed right down through it, and it ran off with your profit and your money. So that's a prime example of, these channels and things like this don't always work that well unless it's in a conditional phase where price is super overextended. And so now we do see that it is starting to bounce along this area now, right here, kind of respecting this zone where it has come down and, kind of hit a few times. You can see that it did it back here. You can see that it kind of broke down below it here, then bounced back up. But it is kind of respecting this area. It came down, bounced off it, came down, is now retesting, and we have slight consolidation taking place right here as well. We did get another short trade winner there. And so I wouldn't really consider this super overextended, but again, historically, it has went this level 1, 2, 3, 4, and possibly 5 times. At least 4 that we know of that at that um, at that level of movement, it has then reversed and taken course in another direction. And so let's watch it here and see what it does. It is giving a little bit of an interesting pattern right here. Like I said, it's pushed down, popped up for a second, ran back down into it. It's now developing wicks to the downside, and it's starting to consolidate here a little bit. Those are all pretty good signs that we're going to get a push back to the upside, at least for a little bit. Let's see, picked up a short right there. Right there. And so remember back over here, whenever I was explaining that market makers will often run prices through levels and try to pick up the breakout traders. This is an example of them doing that, where most breakout traders would have put their orders to go short, at least in this area, probably all in an entire channel right like this. And so you can see here that there were lows down here, and so some would have put it down below that area, some would have put it right below this little wick right here, some would have put it below these wicks right here, or that wick right there. But this is kind of the area just riddled with short orders from breakout traders who was waiting for this thing to break to the downside and take off. And so now market makers have come down, ran it into that area, and let's see what they do. They then reverse it and shove it to the upside. There you have it. Kind of classic market maker type action right there. And so if you were a breakout trader, you got super disastrously beat up right here. But also the thing is, if you were a reversal trader, when we looked at this right here in the consolidation and we said, yeah, this looks good to go to the upside, and you bought in on, say, this candle here when it rejected with a strong wick to the downside, or this candle here when you had a little bit more confirmation, most traders would have put their stop orders right in this same zone. So breakout traders would have had short orders here. The reversal traders would have had your stop orders here. And so when it came down, it smashed through a whole bunch of stops, taking a whole bunch of money from people before they turned around and shoved it to the upside and took the market in the direction that you wanted it to go in the first place. All right, so we have another buy order right there, buy signal. Price has now moved pretty significantly up here. Again, it's riding this channel right here where it seems to have respected this area multiple times, but at a certain point they're gonna break out of this channel, and that's because the more they let it ride in this channel is the more that people start to catch on to exactly what they're doing. And this looks like a pretty good time for them to try to break it out. It's made multiple attempts, but that's just speculation at this point. It's definitely not something I would have traded off of, but it's bound to happen very soon. So let's see what they do. Let's see if they break it out or if they shove it back down. They've pushed it down pretty good ways. Only went halfway down this time. Didn't quite make it the full amount there. Let's go back here, make sure I get this signal right here. Let's see what they do. It's bouncing along. Really looks like they want to just shove this thing to the upside. We're at the end of the year now. Let me wrap up the last couple of signals here. That would have been a losing trade. That one also would have been a losing trade. And that one also, nope, that one's not going to count because it wasn't quite in the year. So, play it forward here a little bit more. Market maker shoving it down, down, down. They weren't ready to give it the go to the upside yet. And again, that's why there was no confidence in actually trading that. It just, every time it comes up and touches one of these areas, it is getting more and more likely that it's going to break out of this channel with each touch. And so each time gets a little bit more closer, a little bit closer, a little bit closer. So anyways, all right, so there we have it. It is rather difficult to see the marks we have made on this indicator. So let's do a couple of things here. Let's remove these guys, and then I'm going to silence that indicator right there, and we're going to count them off. It's looking really decent actually. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, and 20. So 20 signals altogether. And we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and 14. And so that definitely puts us over the 60% marker. Like I said, all in all, not a bad indicator. Pretty decent. Nice little twist on using moving averages. Yeah, not bad at all. It's definitely going to go on the yes list, and then we will move on from here. If you have not already, like this video, comment below, subscribe to the channel, and turn on the bell notification so that way you are notified anytime I post a new video. As part of the team, it's important that you are seeing the new videos as they come out so you know what it is that we are discussing and what indicators we are testing, have tested, and have not tested. Also, like usual, there is a link below in the description to the Discord server. You can join us on Discord so that way we can further discuss the indicators
and have discussions as we move forward building our trading system. And lastly, like usual, there is a link below to TradingView. If you like what you see whenever I use TradingView and you are interested in signing up for TradingView, if you use the link below and sign up for a paid account, you will save a little bit of money. So, all right, everybody, I will see you on the next video.